Hello everybody, welcome back to Clear Surf Financial Education. Carl Keister here. So I wanted to talk a little bit about what's going on in the market and is it getting a little bit too frothy. I ran across a really good article that I got from one of the gentlemen I get a newsletter from that I thought I'm going to share. It's really interesting and why I think so many people are being forced into the market now and even taking on more risk. If you look at the GameStop trade, cryptocurrency is hitting another high as I speak today. So we're going to look into that. So first of all, I thought it was really interesting that he pointed out that the people that are suffering the most right now are the retirees. And the retirees basically, they used to save money, put it into like a CD or even bonds, and you could live off the interest from those assets in retirement and live a dignified retirement. He was showing here in a study that back in the 60s, that's what you did. You put money away, you worked hard, you invested $100,000 in the 60s, that will grow to $750,000 in 30 years at a 7%, because that's when bonds were paying 7% interest. So what happened was, during the financial crisis in 2008 and 9, we had a prolonged downturn and the Fed took interest rates to low and held them there probably too long. And what did that do? It created the bubble. And that cycle just seemed to be repeating itself because now we're going through COVID and we're seeing the same thing, that the government's answer has been, people have lost jobs, people are struggling, so let's print more money and let's push out these checks. And what that's doing is that's forcing people, well, if you get the check, you need to invest it, so they're gonna put it into the stock market because you can't put it in a CD or anything else, so people are investing that. And some people are taking on way too much risk. I read some threads again this weekend on those people that were in GameStop, and one person was showing they lost like $500,000. They were buying GameStop believing it was going to keep going up and up. And in the news this past week, they showed the CEO, Vlad, of Robinhood was being grilled by Congress. You had Citron in there, Melvin Capital, and also the trader from Mass Mutual. He was affiliated with Mass Mutual, which is my old employer. Kind of surprised to see that, but he was affiliated. He was the one who kept pumping that stock up, and they were questioning why he did that, and should he have known better not to pump a stock as a registered broker, a registered rep, I should say. But I don't know if he currently was. I thought he was working in marketing. But either way, pretty interesting to see that. But that just goes to show you that people are right now, or whether you want to call it the gamification. I've seen that term used a lot this week of the stock market, where people are either desperate or looking for something new to get involved in, and they're learning a tough lesson the first time through. I mentioned a couple of these stocks in passing and prior videos. There's links to other videos that I've done that side. And also you just want to be careful, because anything that seems too good to be true probably is. Now the whole thing with the cryptocurrency, which is going on, it just keeps going up and up, and that's because you're just getting, Elon Musk came out and he tweeted, he's been running this thing up, actually put $1.5 billion of his own money in there. But he came out yesterday or today and said, Bitcoin seems a little lofty. It's actually going over a $1 trillion market cap. So a man had put money into it, which he's done this before with Tesla. When Tesla was trading close to 420, he said it was kind of overvalued. It pulled back a little bit and then took off to new heights. So who knows? Cryptocurrency could do the same. Much of the information I've been reading about cryptocurrency, I'm almost tempted to put my toe in just for maybe a couple percentage points, because I looked today, because it does trade 24/7. It's over $57,000 as of today. So any stock that goes along with that. So if you want to play the safe bet, I mentioned these in a prior video which was on PayPal and Square. So PayPal went from 225 to 300 in simply a matter of the last couple months. Square has done very similar things too, because they're showing that they're getting in there and they're starting to push around and go compete with the big boys now, because it was first Venmo and the Cash App, and they were just using it for people to transfer money amongst themselves, family and friends who go out to dinner, and now they're finding new ways to leverage this. And Square came out, I watched that a couple times this week, that I was looking at that trade, and basically it's talking about how they have 377 million subscribers, and they're going to take that to like 750 million subscribers is their plans. So if you want to play it more conservatively, there's a couple ideas. Square seems to be acting better than PayPal because it's run so far so fast. Square seems to act a little better, but another stock I watch is RIOT, RIOT. This is a super speculative. I mean, it was less than $1. I think it was less than a year ago, 6 months ago, it was $1, and it traded this week actually from 55 to like 70. Same with Quantum QS. I'm actually in that one right now. That was one that got bumped. One of the analysts came out and took it to $70 price target. It hit it this week. It went from 55 to 70. So I actually am in that one this week, and we're going to see it. It's right around 64. I think it's going to go back up and touch 70 again. At least that's how I'm playing it. So anyway, there's a lot of ways to look at this, and you can play this market that way. But if you look at other things, Apple, Microsoft, all the stocks that they're really the big names that you've heard about for a while, they've kind of cooled off. And Warren Buffett even came out. They showed his holdings. Everybody likes to look and see what one of the smartest investors on the planet, what he's holding. He was one of the largest holders of Apple, and he's been paring back. And since that announcement came out this week, Apple stock has been going down $1 or $2 a day for most of the week. So that stock has been peeling back, and I also saw some moves on Microsoft pulling back. And that's another one I would definitely, if we have any type of correction in the next, this quarter or next quarter, there are two names that I do want to take a look at. So PayPal, Square, Apple, Microsoft. And then Facebook's been under a lot of pressure. Facebook's been under pressure because they basically are going to not allow Australia to put news out there. They wanted to charge them for it. So I thought that was pretty, I don't know, to me it just seems very aggressive how these companies like Google and Facebook are pretty much dictating not only just who can be on their platform, but now they're telling entire countries that we're not going to allow news feeds to be posted. Of course, the Australian government comes back and says, we had, during a crisis, we've had need for COVID information to get out to the public, while Facebook is taking down some of their pages. So I think that's why Facebook is down. I wouldn't be surprised to see Facebook under more pressure, because they're being pressured by regulators actually overseas in Europe, and now they're butting heads with Australia. And I know of more than a few people or friends that have mentioned about getting off of Facebook just because how they handled the political tailwinds from the Trump election. I know some conservatives that have jumped off of Facebook because of that, and you're starting to see people go to Parler and some other places that, the Parler's back up and running, by the way. They were down for a while, and I read something not too long ago, they're back up. So these big tech companies, they're gonna run into some headwinds, I do think, here. So don't be surprised if we get a pullback. You're gonna see a nice size pullback in some of these companies. But again, for my long-term retirees and investors, to stay with the market, you can't time these things. I don't know when that correction's gonna come. I just have a feeling that it just feels like some things are running just way too far, too hot, too fast, and they're jumping in on the GameStoppers, or the Reddit folks jumped in on the Tilray, and they pushed that up, almost doubled it in a couple days. The prior week, this week it kind of came back in. So you're seeing them jump on these Nokia. All you have to do each day is go on there and look and see what is the highest volatility, or not highest volatility, but the highest volume stocks. In the morning, you see it's the AMC, it's NIO, I think it is the Chinese company, the electric car company. You'll see what they're pushing early in the morning. Even AMC, the movie theater, was in there. So keep an eye on those, but starting to see some frails, like some of the big name movers like Apple. When you start seeing them pull back and Warren Buffett starts shedding some of his positions, he's always had a saying, be greedy when others are fearful, and be fearful when others are greedy. So to see him peeling back on the biggest company in the world, I'm not too surprised about that. It just goes to show he's still being very disciplined, and maybe he's taking some, maybe not locking a ton of profit, but the fact he's taking money off the table, that's a smart thing to do in this environment. So anyway, I just wanted to bring that to you. Keep an eye on the Bitcoin trades, that RIOT, R-I-O-T, that thing is moving like $10 a day. So if you're feeling like you want to try to squeeze out a speculative trade, look at RIOT, RIOT. You'll see the symbol go back for 1 year, and you'll see how this thing has moved. But it's definitely not for the faint of heart. But when this thing pulls back, some of these days it's pulling back $10. It's a decent mover. As long as Bitcoin stays where it is or higher, that has been the play. When Bitcoin collapsed back in 2017, so did this stock. It went all the way back to worth 50 cents or $1, something like that. And I've watched this thing, and I might be getting in there. Quantum QS is the other one I'm watching very, very closely. but I'm still waiting for that bigger pullback to put more money into the market. I just don't like buying up here at these prices, especially this time of year, because earnings season is about ready to end. And typically when earnings season is over and you have no more catalyst to push the next leg higher. So the Fed said they're going to be accommodative this week. Janet Yellen wants more stimulus. Jerome Powell said they're going to remain accommodative. They keep saying this over and over. So as long as the Fed's going to keep printing money, it's terrible if you're a retiree and you're trying to save money in a CD or something of that nature. That's why you almost have to be in the market. They're forcing you into the market. That article I was showing, I talked about earlier at the beginning. You cannot put money in a CD and expect to live off the interest. And you can't buy bonds anymore, so you really have no choice but to be in the market. So with that being said, I'll leave it there, and we'll see how it goes. Keep an eye on Bitcoin. Some of the stocks I mentioned, the PayPals and the Squares and the RIOTs, and they're all following Bitcoin. If Bitcoin stays up, they're going to stay up too. So anyway, till next time, take care.